Hi, everyone. I am going to go over the Forex factory calendar first, and then go over just some basic market concepts, um, just so that you guys can have them and use them along with your trades. So this week we have, like I told you guys on Friday, quite a bit of news coming out. Today we had a speech from the Bank of England governor, and I pulled up their budget because their budget is something that's going to be really important going forward, because they talked a lot about their economy, how much it shrank. It shrank by like 10%. That's the biggest shrink they've ever had to their economy in the UK. So they're now trying to figure out how to grow from that. 300 years is a long time. So they haven't had a shrink in their economy since like somewhere around the time of like the independence of the US. I mean, give or take, it's not like exact, but in that time frame, it just kind of gives you an idea of how long it's really been. So they have a lot to do as far as like trying to grow their economy and move forward. Tomorrow we have a speech from the Royal Bank of Australia governor, and that's going to be important, talking about Australia's growth. Also, since gold is one of their exports, one of their largest exports, it's going to be important to hear how current gold prices are going to shape their economy and their market going forward. Also, just thinking about last year as a whole, Australia tended to fare pretty good compared to other countries. They didn't have as many of the issues that some of the other countries had. So it's going to be interesting to see how now other countries rely on them, and to see where they found some true independence during COVID to kind of function on their own. Wednesday, going to be an important day for the United States. I'm going to try to help put CPI into context for you guys. So CPI is the Consumer Price Index. So this is the measurement of how prices change in the store. So for those of you who are new and haven't heard me explain it before, this is like going to the store one day and seeing a soda or a bottle of juice for $1. Then going back a month later, and that same juice that was $1, same size, same kind, same everything, instead of it being $1, this next time it's like $1.25. This on the Forex Factory calendar measures that. So you're able to go in, you're able to see how prices change for different groups of items that you buy each and every day. So the reason why we're going to be looking at this and paying very close attention to it on Wednesday is because whenever our Fed changed interest rates last year, they made a commitment to not changing the interest rates again, changing meaning raising them for another 2 to 3 years. So when it was 2020, they made a commitment and said, we are not going to change interest rates again until 2022 or 2023. That kind of runs towards the end of Jerome Powell's term anyway. So it's going to be interesting to see how well they're going to be able to manage keeping interest rates that low, because as we look at these numbers for the CPI, the measurement that is taking is inflation. So this number that comes up over here, where the space is blank, if it's higher than the number that's here in the middle, that means that prices increase, which is what you want to an extent, because that tells the Fed that it's okay now to raise interest rates. But if we see these prices increase, which means inflation is growing, and the Fed does not change interest rates, meaning if the Fed does not increase interest rates, then inflation is just going to keep going. The purpose of increasing the interest rates is to help the prices stay balanced. So, when you go in the store and you see that juice, that's $1, raising interest rates will help to keep that juice $1. If interest rates stay low and you go in the store, after a month or two and it's 125, and then you continue to go to the store, interest rates are still low, that juice will go from $1 to 125 to being like 135 to 150 for that same bottle, same kind, same everything. So that's why this CPI number is so important now, is because we're really trying to see how far and how much inflation is going to grow. Our Fed has already said that they're okay with our economy running a little hot. So that would be the equivalent to you getting in your car and you're driving along and you see a warning light come on in your car and you're like, I'm gonna drive a little bit more. It's okay. Either your car is going to tear up or you're going to, by grace, make it to where you got to go and fix the problem. Typically, what happens with the economy, and you can look back in history and see this, is typically the Fed waits till it's too late. The Fed waits until you actually start seeing signs of something going wrong and then they fix it. So they're being more reactive instead of being proactive. So keep that in mind Wednesday, whenever you see these numbers. So essentially what you want to look for when these numbers come out Wednesday is to see this number the same or slightly more than the number that's in the middle. So slightly more than 0.4% and 0.2% for these CPI numbers. And over time, we definitely want to see the Fed do something about prices if it just continues to grow and grow and grow, because there's still a lot of people out of work. There are still people who haven't been restored back to their full pay that they were cut from, during the major part of the pandemic. So even though, yes, stimulus packages are, you know, going to be going out anytime now once it passes the House and gets Biden's signature, that money for a lot of households is just going to help cover bills that they've been letting, stack up, stuff that they haven't been able to pay. So at some point in time, I feel like the Fed is just going to have to do something about it. It's not uncommon for the Fed to make promises and have to go back on their word and say, well, the economy grew faster than we thought, or it'll be some excuse. And to that, I would just think, why would you make the promise that far out in advance? Because you don't know what could happen in 2 or 3 years. But that was the promise that they made. And we just have to keep monitoring the situation, essentially. So also on Wednesday, Canada's bank rate comes out. A lot of people don't necessarily pay attention to Canadian news, but I look at it because Canada is a major trade partner of ours. Interest rates matter when major corporations and banks are trading money between each other. So it's important for us right now that Canada keeps their rates the same. It's important for Canada that we keep our rates the same and we keep our economies mutually stable. So we'll be paying attention to that news. We'll be paying attention to oil inventories. Oil is another factor when it comes to the Canadian dollar. So if you trade any CAD pairs, that 10 o'clock hour on Wednesday is going to be very important for you, because not only are you getting rate news, but you're also getting oil news as well. And oil, in addition to lumber and maple syrup, is one of Canada's major exports. So pay attention to those. If you pay attention to bond yields and treasuries and you correlate those somehow with something that you trade, not going to go into it, but if you do use that, 1 o'clock on Wednesday is going to be your time to pay attention to the market. Will definitely be a time for those who trade U30 to be glancing and looking at your chart to see if anything major happens when it comes down to the bond auction. On Thursday, we have major Euro news coming out. So we have a policy statement, the refinancing rate, and then we have the ECB press conference. So what's going to be important with this ECB press conference coming up is that Europe, so France in particular, has a lot of countries that they still have like post-colonial ties to, that are having some major issues, and they're sending their military in. These are things, if you have looked at the Euro budget, they didn't account for a lot of this. Most of what the Euro budget accounted for was stabilization after Brexit, the coronavirus, economic growth, and they did account for some protection, but it wasn't on this type of scale. Like, who would have thought that 4 countries that France alone has post-colonial ties to were going to be having issues, like major issues and issues of civil unrest, to the point where you have to get the prime minister to literally speak out on these issues. France hasn't really had to deal with a whole lot of that. So even though it seems like it's civil, it seems like it doesn't have anything to do with finance, at some point it is going to be financial, because these places are going to have to rebuild. They're going to have to get their economies, their militaries, their police forces back on track after all of this. And so that's going to require money. A lot of these countries that I'm talking about don't have the funds and will need France's help. In a lot of these situations, France either has a station for where they can send their troops, or they already have troops in those countries. So it's supplies, it's sending more people, it's trying to control or help, I should say, control the situation. Even though it's not orange or red, for the US on Thursday, unemployment claims is going to be very important, again, because when we're talking about this whole situation with inflation and people spending money and the stimulus package, it doesn't make sense to keep sending out stimulus money if you're not going to do anything about this number right here. At some point in time, you have to tackle the jobs, you have to tackle the unemployment rate. You have to figure out a way for people who have dropped out of the job market to get back in. That's a mandate of the Fed. So that's part of Jerome Powell's job. In addition to keeping prices stable, jobs is another, like the jobs of the American people, the jobs numbers, the unemployment rate, all that stuff, part of his job. So it's going to be really important to get people who dropped out back into the workforce. It's going to be really important for us to see that we're getting back to pre-COVID job levels. Our unemployment rate pre-COVID was like in the 3% range. It was really low. We're in the 6s or so now. And so we have to really cut that. A lot of people, if you scroll through your timeline on social media, if you read articles and stuff, you'll see that a lot of people have no interest in going back into the workforce. A lot of people are like, I want to work for myself. I don't want to go and, work for someone else. I want to have my own time freedom, be able to do what I want to do. And that's cool. But there are parts of the market that won't thrive post COVID, you could say, if we don't get people back into the job market, just because there won't be enough people to actually help service that market. That was something Jerome Powell talked about a couple of weeks ago. We just have to keep that in mind, because this is high. Having unemployment claims in like the 700,000 range is high. Have to definitely get that down, find a way to incentivize people. And a lot of people don't like it because they feel like corporations have enough money. But at some point in time, the Fed is going to have to, if we can't get that job number down, provide another stimulus solely for corporations. And it's going to be solely for corporations because they're going to need the capital on the back end to help supply the jobs, or some type of benefit on the corporate level to bring more people in. And it's easy to say, they have big budgets, they have big incomes, big profits and stuff. But when you think about the mission of a business, when you think about what businesses do, how they have to operate, a lot of businesses don't keep but so much money on hand and in some type of convertible fund or type of fund. So it's not going to be feasible. Like the Fed is going to have to step in and help out in that situation. And that's the fourth stimulus package that gets talked about for the fall, in addition to possibly giving out another round of individual checks if needed. But the fourth round would definitely be more corporate if it has to happen. And then Friday, Canadian employment news. So Canadian employment news is going to be important, just like our news is important. Canada is one of our close allies. They're our neighboring country to the north. And we care about their unemployment rate because for a lot of reasons, if people in Canada lose jobs, that affects our trade relationship with them. That affects the supply chain that we have with them and that they have with Mexico because of the whole USMA, or however it is. It's the US, Canada, and Mexico agreement. That agreement that Trump came up with and all the leaders signed during his administration, that trade agreement is going to be heavily affected whenever it comes down to this job number that Canada has coming out. And it's easy to look at their job number and say, 105,000 jobs compared to the job expectation that we have here. Also, it's easy to look at their unemployment rate and say, 9%, where ours is 6%, we're doing better than them. You have to think about the size of the economy as well. It's very different between the two countries. The job force is different. So when we're comparing these numbers and whenever you're looking at them on the chart, definitely know that UCAD on Friday, when you're looking at it, it's going to be based off of relative similarities, not the actual job numbers themselves whenever they come out. I'm not going to go through this report. I will just put it in the Zoom chat for you guys to have, but this is that big budget document that came out from the UK. It has lots of colorful charts and graphs and all that lovely stuff. It even shows you how the UK breaks down their divisions for their country or for their finances. So, there's like all these different divisions within the 4 kingdoms that make up the UK. So like I said, I'll put this chat in the Zoom chat for you guys. I'll put this link in the Zoom chat for you guys so that you can have it. I wanted to pull up oil numbers. I was telling you guys about oil last week, how there was a little mismatch between oil and gasoline. So on the energy website, so this is the home page. Whenever you come here, you can click on retail gasoline, you can click on oil, you can click on all of these links and go through and just see what the average numbers are and just kind of track those if you want to. I definitely look at these. I pay attention to these numbers a lot. And with oil, it goes back pretty far. It takes you all the way back to 1983. And you can look at how prices have changed over time. So that's that with oil. I just wanted to show you guys like where and how you could find some of this information that I talk about. So here's something I wanted to show you guys. I'm not necessarily going to delve into all of the information for this, But for those of you who've been on the call with us, so this is the Dow Jones. I've been talking about stocks with you guys. I haven't just completely broken down all the different indices for you, but the Dow Jones, 30 of the largest American or US based companies, so they have to be US based to be in the Dow. NASDAQ is 90% pharmaceuticals and technology. S&P 500, 500 stocks in that portfolio, and it's a range of I would say not necessarily popular, but stocks that are profitable to start, because you have to be profitable to do an IPO. Can't necessarily be negative, which is why a lot of companies end up raising money. Profitable, you have to be a solid company to be in the S&P 500, because remember, there's an S&P like 1000 and S&P 200. These are, I'm trying to really figure out how to just describe it to you guys, but essentially, let's put it like this: 500 diverse companies that are profitable, they're stable, and they're, for the most part, American. There are some companies in there that are European. Most of those that are European are either tech or they're pharmaceutical companies. And the S&P 500 is a relative measure of part of the job market. So it helps you to measure underlying correlations with the job market. The NASDAQ helps you to see corporate thinking. It helps you to see tech thinking, and it helps you to see a lot of sentiment. The Dow Jones helps you to see what the American stock market, what the American base is like. It's pretty much diverse. There's almost one company in there from every sector that I went over with you guys in the Dow Jones. So you'll definitely be able to get a variety there. I wanted to point out that the Dow Jones was up today, 306 points. The NASDAQ was down 310. The S&P was down 20. And then the VIX was up. So for those of you who've been with us before, or just somebody, if you know otherwise, what is wrong with that? What's wrong with the Dow being up, NASDAQ being down, S&P being down, and the VIX being up? Like, there's something wrong there. I want someone to tell me like what it is. The indices should correlate. That's one. But what's wrong with the Dow being up and the VIX being up? All right, so whenever it comes down to the indices, so the indices should correlate. And then also with your volatility index, which is your VIX, volatility index, it's not supposed to move in the same direction. So both of these are being very volatile. Both of these are moving very bullishly. They're not supposed to move in the same direction. So that's a problem. So whenever you have things in the market that are supposed to correlate that stop correlating, there is a reason why. Something is going on in the market that is a red flag saying something is wrong here. Like, look at me. Hey, I have a problem. Fix me. So with the stocks, with the markets overall right now, we've been talking about stocks. We've been talking about how to find out how to buy them. We haven't necessarily talked about how to know whether or not a stock is overpriced or not, but there are ways that a lot of analysts will use. There are indicators you can put on your chart, but without even having to do any of that. And Mr. Levels can do this. He's shown it before, but whenever he goes over U30, look at where U30 is now and look at where U30 was just prior to COVID. We haven't even fully reopened yet, and we've already made new all-time highs. We've actually hit the last high prior to COVID, passed that, and then made another high. That's a problem. We haven't fully reopened yet. We haven't started traveling yet. Oil prices are high. We haven't started traveling yet. Oil prices are like $65. That's a problem. The volatility index is up. Volatility is up, but these are down, which they're supposed to be, but this is up. That tells me that looking at the Dow Jones, because it's only the US market, because this is only the US market right here. There's no European pharmaceutical companies. There's no Alibaba. There's no it's only US companies here. That's telling me that the US market and the sentiment for the US market is bullish, but everything else is selling off. There are US components in these other indices here, the NASDAQ and the S&P 500. But this VIX, in addition to measuring volatility, it measures fear and greed. It's measuring fear and greed in the market. What this is telling me is that the market is being super greedy while other areas of the market are starting to sell off. That is not a good correlation. We have stimulus money that people and the market has already accounted for, and they're starting to anticipate for now. We haven't actually gotten it yet. So what happens if the stimulus money gets printed and people don't do with the stimulus money what the government wants them to do with the stimulus money, which is spend it? If people take their stimulus check and they save it, or if they take their stimulus check and pay past bills, or take their stimulus check and put it into an investment account, or put it into Bitcoin, that is not what the Fed wants people to do with their stimulus check, but there are going to be people who probably do that. That is going to cause major issues in the market, and this excitement that you see in this green number here is going to surely fade away. Definitely fade away. It's happened before in the market. It happened in 2016, whenever there was a little, I like to call it undercover stimulus, because it's not something that gets publicly announced when they give banks large sums of money. But it happened then. It happened in 2000. It happened in 1983. It happened in 1933. Like, you go back to all these major market dips and look right before it. Like, you'll see like where something very similar to what's going on now happened then. There are strong correlations. It doesn't necessarily mean it happens every time, but it's a very strong correlation to these major dips in the market. The ones that I mentioned are the ones where there were major dips and it actually happened. So pay attention to, like, whenever you're looking at the indices on the news and you're watching the numbers scroll by, know the correlations and just kind of like keep in the back of your mind, like, oh, that doesn't look right. Because it's telling you that something's setting up to happen. The markets are now at higher highs than what we were pre-COVID, and we haven't necessarily gotten out of COVID yet. So last thing, interest rates. Someone asked me, how do you find global interest rates? This is the website for it, global-rates.com. It's one of the websites you can use. There are other websites where you can find it too. But here, you can go through and click on the country if you like, but it tells you the country, tells you the current interest rate, the last directional change that it was made, or that was made. It'll tell you the previous rate prior to the one that we have now, and then the date that it was changed. One that I wanted to really point out to you guys, well, really two. The first one is the US. And pointing out the US rate is because that's where we are for most of us. The current rate is 0.25%, but remember, it's really 0 to 0.25%. The previous rate before that was 1.25%. So we dropped a whole 100 basis points is what they will call it on the news, but a whole 1% is what we dropped. And it was almost a whole year ago when that happened. But the one that I want to show you guys is the Swiss franc. So the Swiss franc, they're a safe haven currency. Their interest rate is negative 0.75%. And the last time they changed their interest rate was in 2015. So there's a reason why they're a safe haven currency. There's a reason why you hear about people creating Swiss bank accounts and storing their money in Switzerland, and trying to really protect the value of their money. That interest rate is why. That interest rate is why a lot of people send their money there, because when you put your money in a Swiss bank account, it holds its value. The value of it's not going to depreciate. It's not going anywhere. And depending on what country you're actually transferring or converting your currency from, you actually make money putting your money into a Swiss bank account. If not on inflation, just off of the conversion rate. So wanted to show you guys that, like, it's definitely a safe haven. 2015, considering that we went through COVID and they didn't change their interest rate, says a lot. Sweden, their interest rates are 0. The last time they changed their interest rate was in 2019. That was just prior to COVID. They didn't have to do any other changes. Sweden is a country that has a relatively decent market, relatively decent employment status for their citizens. And they also have converted and started using a form of digital currency. Same thing with the Danish. They haven't changed their interest rate since 2015, and they use digital currency. They don't even use their own currency anymore in Denmark. So the Danish interest rate, the Swiss interest rate have always kept my attention because of the status of their money or the status of their economy. And then I just compare it to ours here in the United States. And as you can see, most of these that were changed in 2020, these were countries that were affected by COVID. And Japan, not really going to talk a whole lot about Japan, but it was considered to be a safe haven. It's borderline right now, but they haven't changed their interest rate either since 2016. So I'm done talking about that. I'm actually done talking, period. I'm gonna go ahead and turn it over to Mr. Level so that he can get started with the technicals. And I'll put that link in the chat for you guys.
Cool beans. Great job as always, Corman. We appreciate you. All right, let's jump into these technicals. As always, we're going to look at this dollar first. As y'all know, looking back at last week, and starting with this week, we know that we have been starting to be bullish bias for the dollar, meaning we've been looking for the dollar to give us some upward movement. And as we can see, we've been getting that upward movement. Um, just solely off of fundamentals, everything that we've been finding out from Corman when she's been going over the news items, everything that's going on with the economy right now, with the government pouring all of this money into the economy, that's going to stimulate the economy, and hence that should give us some bullish momentum in the dollar, and we're starting to see the dollar starting to push to the upside. um so with that being said, let's see, I do got my eyes here. um 0.95 cent, I want to see the dollar reach for that price level. If we come down to the hour, we can see we got that bullish move last week, broke straight through this order block. This was, came up, filled in this imbalance, and now we're still pushing up, so that's good. So yeah, I want to see the dollar reach for that 0.95 price level this week. Let's see if we can get up there with this stimulus. So with that being said, let's look at our currency pairs. Looking back at last week, I told you guys that I wanted to see Euro USD sell, of course, because we was expecting the dollar to be bullish, and we know that our currency pairs move in the opposite direction of the dollar. And so I gave you guys this sell right here, live on the Zoom call. Corman, of course, took the trade. I don't know if anybody else did, but I think she's still holding this trade. I think it's up like 200 something pips. Yeah, like 222 pips. Them a whole bunch of chips. So of course, with us expecting the dollar to keep pushing to the upside, we're gonna expect Euro USD to just keep pumping to the downside. Um, so let's see her keep pushing. She may give us a retest of the structure. She may not. She come back and give us a retest of the structure. I will add another position here and put my stop loss above here. Minimum risk, optimum gain. Let's move on to GBP USD. Same thing. We know that our currency pairs that we trade, they all correlate most of the time. So, and all of them move in the opposite direction of the dollar. So we know if we're expecting the dollar to move up, we're expecting GBP USD to push down. We had this liquidity area grab last week. I told you guys that I expected to see price come up and grab that liquidity right there, and then we seen price slam down through the structure, gave us a good break, came back and retest, didn't get back above the previous high. So therefore, along with the dollar continuing to push to the upside, I expect to see GBP USD continue to push to the downside. We have some good imbalance over here that needs to get filled in. There, there. And then this is definitely a good imbalanced area right here that needs to get filled in. So yeah. So what it's looking like is, that move, that 300 pip move I was looking for last week. What it looks like is the market gave us half of it last week, and it's gonna give us the rest this week, potentially now. But we don't predict the markets; we roll with the markets. So moving on to NZD/USD, same thing. She already breaking out. All y'all currency traders, I hope y'all paying attention, and I hope y'all catching these pills. Good gracious. Um, yeah, gave y'all this setup last week. Same thing. Wanted to see NZD USD make it down here into um this price level. It gave us that sell down to the price level. Uh, it came back up above it, took out these. If you see these equal highs right here, that was pretty. Didn't come back above this previous high right here though. Just clean these equal highs, this little liquidity pool, and then slam right back down. And then came back up, gave you a retest of the levels that always stay relevant. And it's continuing to sell down. So that's beautiful. Let's look to the downside, see what she may be reaching for. Yeah, I see liquidity here. And we got not liquidity, I'm sorry. I see imbalance here. I see imbalance here, and I see imbalance here. And if I can put that on, make it a little bit bigger for you guys. I know sometimes y'all be having a hard time seeing my monitor. So imbalance here and imbalance here. So that's what I would like to see out of NZD USD for the rest of the week. From current price, was that? Oh yeah, that's like another 170 pips. So cool beans. She's already given us 160. So yeah, look like she halved and halved us on the move, but it's all good. We're gonna be there with her. Moving on to silver, moving on to our metals. Um, got below the structure last week. Told you guys to look for the break and the retest. Got the break, got the retest, and so beautiful. That was beautiful right there. Um, Came back up, right back into the structure. Look at this. Came right back into the structure and continue to sell off. Beautiful. Y'all know I told y'all last week that I did want to see silver come down here and retest my $24 price levels that I had right here. These two price levels. Um, got fairly close, real close. We did get to $24 as a matter of fact, just didn't get to my levels. But it's all good. We may get there this week, should get there this week, and could potentially come down into the 23-ish price range. So we'll wait and see. But yeah, I would wait and see if silver's gonna come back up and at least see if she's gonna try to come back up and retest this. Got a little, it look like a little order block right there, but it's not. Uh, but see if it's gonna try to come and retest this high, and if it can't break above this high, then yeah, she's gonna keep falling to the downside. Looking at gold, gold got below our structure as well. Y'all know gold and silver kind of correlates. And I say kind of because yeah, they yeah, roughly correlate, should I say. But we see we got the break below the structure in the retest. Beautiful retest. Retest. This was a beautiful retest. All y'all metal trader, gold traders, y'all should have told silver. Y'all should be tearing silver up. Retest, respect, hold it right up into the structure, right up into the structure, break through the structure. Told you these structures stay relevant, price levels stay relevant, comes right back up into it, holds it, sells off, gives you another opportunity, comes back, retest. That very next candle, you sell, you pull the trigger. You pull the trigger. So yeah, I want to see gold. See what gold got to the downside. Let's see gold come back down about 1640. Yeah. See gold come down to 1640. Man. And we could see gold come down to 1500. I'ma see. We gonna see. We gonna keep our eye on gold this week. Yeah, so yeah, expect to see gold keep dropping as well. Oil. Yes, sir. So we got the buy, got the liquidity grab. And we seen all just keep on pushing. Now y'all see all has came back down, retesting structure. See all I want to see all keep on pushing to the upside. Let me see something. You know what? Yeah. Yeah, I'll wait for all to come in and fill in this imbalance. No need of rushing anything, Don't want to be too hasty. Even though she could go ahead and take off. She could. But I don't think she's gonna take out without filling in this imbalance right here. That's just me. So I'm gonna wait. But we're gonna see if the dollar keeps pushing to the upside, because we know that the dollar and oil correlates together. So the dollars keep pushing up. We're gonna keep taking oil up. So yeah. As a matter of fact, if this next candle comes down and retest this candle and don't break back below this low, take that buy. I would take that buy. Stop loss here below the previous low, right here. This low, stop loss there. First TP here. Previous high. That's 315 pips. That's a good play for you this week on oil. Last but not least, U30. Let me go down 15 minutes. Let's look back at time and price this morning. We see our setup London open right here. See price give us this pullback. After we get this aggressive move to the upside, we see our pullback down into midnight and then down to 2 to 5. 2 to 5 right here gives you the setup. price push it to the upside, gives you this pullback right back down into the setup and pushes to the upside. New York open, what happens? Market pulls down, gives you a setup, keep pushing in the same direction that it was pushing during London session. Time and price, I told y'all that thing 95% accurate all the time. All the time, man. So when I seen this push up today, we were showing very, very, very overbought after this buy. So I expected price to start showing some bearish momentum, and then I seen divergence on the RSI. Price was still pushing up here. Price was still pushing up here. From this high to this high. But if you look at the RSI, the relative strength index, follow my cursor up to here, down to RSI. You see, I'm starting at that same high. I'm going from that same high to the same high. And you see the divergence. You see how it's flat here. See how it's flat there going from the high to the next high. But here, it's obviously and clearly swinging higher. That's divergence. So where I see that, I wait for the drop. It gives me that. Boom. And then when it pulled back, I pull the trigger. I put my stop loss above here. And with the things that I have confirming that the market is showing bearish momentum now, I just trust my analysis. And I set my stop. I set my take profit on this trade right here. My take profit was like down here to this low, the bottom of the net structure. So it's right here. Y'all know it don't take a lot with you. That right there was like 1,400 pips. I was satisfied with that. And then when we got this pullback here, yeah, as y'all seen, I dropped the demonstrations in the group chat showing y'all how I was adding my positions at all the pullbacks. So when I got this pullback here, I added a position here and took it down to here. I wanted it to come down to this structure, but it didn't. So when we got down here and you see this little wick we got right here, when she started pulling back, I took my money out the table because money in the pocket is always better than money on the table. So what I'm waiting to see for U30 now, just following price action. I see when we got this push down, we just had this push up here, but we didn't close above these two previous highs. So until we close above these two previous highs, I'm going to keep shorting U30 down to the next structure, which is right here. So when we get this pullback, I'm going to see how U30 acts when it gets right here. Because this is a lot. And you know what? Nah, it's setting up too nice right there. That's yeah. Yeah, they probably finna definitely grab that. Just looking at that, that's pretty. Good gracious. That's real. Yeah, that's too clean. Yeah, that's too clean. Yeah, they're gonna reach up there and grab that. So yeah, we could see U30 keep pushing to the upside. or we could just see U30 come up, clear out these equal highs right here, come back up into this imbalance right here that it just created with this down push, and then sell out. So that's what I'm gonna be looking for going throughout the rest of the night. I'm gonna be looking for U30 to make a liquidity grab, but not break back above this high. And if we do get that, um, then I'm going to continue, like I said, continue to short U30 to the next structure, which would be this structure right here. So with that being said, I'll pass it over to my brother Ghost and let him do his thing.
What's going on, bro?
What's going on, bro?
How y'all doing? Okay,
Great, great.
let me share to get my screen share going. Okay, seen you just talking about U30. I got broke even as you. If y'all can see my screen.
Yes, sir.
Yeah, I was in the cell. I had caught a cell. Took profit a couple times. Oh, my freaking computer about to go. Then I just was in another cell, but when I counter trend trade, I make sure as soon as I get into some decent profit, either I'll take it or I'll always move. Since I took a couple base hits already, I'll call profit. I was going to see if this one ran, but I put my SL at break even immediately, but just in case it didn't, because we are on an uptrend. And even though I like to see hit my TPs, when you counter trend trading, you just really got to take what the market give you, because But like I said, I feel the same way. I'm going to see if it's going to come back up here for this liquidity grab, right here, because right over it, after if it pushes up and kills these equal highs, it is a nice engulfing play candle above it to make sure to not make sure, but to see if it's going to push to the downside after that. So that's what I'm kind of waiting for to take my next sell at on a 15-minute. I'm looking at the 15-minute chart. So with that being said, that's what I got for you 30. If it breaks above that, I'll be looking to continue to the upside. I've been in a GJ sell. Actually, I lost, but risk management was in place. So actually I could have took an up move after this right here on this 15-minute candle, but I didn't. Took a loss on this, but you see the risk to reward was almost a 6-to-1, a little bit over a 5.5 ratio to 1. So I'm cool with that. We can't win them all. I'm looking for, since GJ did that, I'm looking for GJ to continue to push to the upside. I mean, unless continue to push to the upside. So I'll be looking for entry for a continuation trade. Like last week or maybe the end of the week before, I told you guys I was looking on the Zoom that I was looking for gold. It was right here. What was that? So around February 18th, I said I was looking for gold. February 18th, I was looking for gold to drop to the 1680 level, and I was going to take the buy. It had pushed up, but it came all the way down. So I've been in this buy right here since this morning. I'm just holding. I'm currently up. I was in a twin trade, so I took profit once already and let one run. It's not breaking this structure though. It keeps coming to this structure and pushing down. It's not giving it the bounce that I want. So gold may continue to push down. I don't know, but I already got myself at a BE here. I got in this morning here. 1680 has been floating around here, not breaking this. I thought it would broke this by now, but it's being stubborn. At least came to right here around 1692 where I had my take profit at, but it's just been holding under this level. So I'm going to see what that does. That's what I got, man. I'm gonna buy gold. I'm gonna buy for gold. I took a loss on my GBP, which is cool, is okay. So I'm gonna look for another entry to the upside. And in the US 30, I am going to look for another entry to the downside after it pushes through here. I'm gonna look for an entry around the 32.029 or 32.030 to sell off, depending on how it looks when it get there. So that's what I got. That's what I'm gonna be looking for tonight. Because if that comes into, I already got my goal in place. If this US 30 plays out overnight, I won't even trade tomorrow. I'll be done.
Boy,
I'll be done. Facts. If this thing play out, I'm done.
Right. Sheesh.
I won't.
Right.
You know, I won't even trade. I won't even trade.
Yeah, no
It'll
need
be
to.
over. It'll be over for me. But you know, I'm just keeping an eye out on that. So if everybody knows me, I'm more of a short-term trader. You know, I'm in and out the same day. So when I give my analysis, this is for short terms. To be honest, only reason why I've held this goal so long is because it didn't kick me out yet. It's just been playing around. And I already shut one, took profit once. So that's where I'm at with it. That's all I got, y'all.
Cool beans. Appreciate you, bro. Appreciate you. All right, so with that, I'll start the recording and take any questions.